My name is David Jaffe. Welcome to the Wealth and Health Podcast, where you'll learn valuable skills and positive habits that will improve your life. This podcast originally aired as a video on my YouTube channel at youtube.com/beststockstrategy. The Wealth and Health Podcast is brought to you by beststockstrategy.com. So I want to talk about realistic expectations when trading options. So here's an email that I received. The individual, and I blacked it out, obviously, for anonymity and respect for this person's privacy. He said, "Good morning, David. I've definitely received your intro emails and watched your YouTube videos. I've subscribed to your channel. I understand time is money. I'm a 47-year-old veteran that has fallen down more times than I care. To admit or account, I was laid off and had to sell my house and my dream car in order to keep them from being foreclosed and repoed. I've not been back to work, nor do I plan to. I'm now on a fixed income." So this leads me to believe that he's on disability. So he receives disability because he's on a fixed income, but he's 47. So, or, potentially he receives like some type of veteran benefits, but my gut feeling is he has disability. And then the fixed income allows him to make passive income, so he can make like trading income or rental income, but he can't be an employee and actually receive a salary. I have a small brokerage, less than $10,000 through E-Trade, and I purchase REITs. My luck has been because of the market. So I think that's great that he has the self-awareness that he made money because of the market. He bought when the market was in one of the dips. I like REITs because their dividends are guaranteed. And unless the company goes, REITs are good. I think they're very solid and stable. Like Realty, which I think is O. There are a few more as well. There's even REITs like AMT, like American Tower, which are really good. I recently watched, or shall I say, listened to your YouTube video of the call you had when you were students. A lot of what you're saying above my head, I did catch when you said we always wanted to buy using the limit option. Well, we actually sell options, but yeah, you always want to use limit orders. I still don't understand this, as using the limit option allows me to select other options that I don't understand. I don't understand what he means by that. But I also watched your video that you suggested where you mentioned be the casino by selling puts. My goals are simply to build an account that supplies me with enough passive income on a monthly basis. An additional $20,000 to $50,000 a year would be ideal. I know this amount would return my lifestyle pre-COVID. I live an extremely simple life and have very little debt. I'm working on getting some collections paid off, roughly $5,000 in total. In summary, I'm interested in building my portfolio, but I may have to put that on hold until I get my debts paid. If you have any suggestions, especially the limit stock purchase option. So, all right, basically by asking about limit orders, he doesn't really understand trading at all. I'm not being critical or trying to make this person feel bad. I've also anonymized it, so there's no way to point the finger at a specific individual, but my thoughts are that by not understanding limit orders, he just doesn't understand a basic concept of investing or trading or anything like that, because that means that he's probably using just market orders, which is fine if you're going to buy stocks because you'll give up a few cents. But when there's less liquidity in the market, especially if you're going to sell options on REITs, then you definitely want to use limit orders, because if you give up 20 cents, then that's $20 a contract. That's a lot. Okay, so my response to him was very short. So you're looking to earn 250% a year on your portfolio. If so, that's completely unrealistic. So I think it's extremely important to have realistic expectations. And I was very blunt, and that was my response. And then he responded back with continued efforts of investing in a disciplined lifestyle. I don't believe it is unrealistic. As I stated, it's my goal, not my expectation, and would prefer a mentor to suggest a plan of action rather than a canned response. I wish you the best. So I respond, and what do you have to offer the mentor? You haven't offered to pay for anything, and you have 100% unrealistic expectations. I encourage you to attempt to try and make 250% a year on your disability income. That way you will learn from experience. So the reason why I'm showing you this and bringing this to your attention is that it's you can't gamble, especially when you don't have a lot of money. Like, I understand the desire or the urge to turn a little bit of money, like $5,000, $10,000 into like $50,000. But the reality is that the more risk you take, the higher the probability is that you're actually going to end up blowing up your account and losing everything. So for this person to think that the S&P is going to return like 8% a year, and I'm sure that he's earning, previously like 10 to 15% a year on his REITs, potentially even more, because real estate has gone up significantly. So maybe 15 to 20% recently over the past 2 or 3 years on his REITs, including dividends. For him to think that by passively investing in REITs or the S&P, that he's going to beat that by 10 to 12 times by trading options, especially for someone who's on disability, who has been down on his luck, who's been alive for 47 years. So he has a significant amount of experience regarding what his capabilities are, what he's good at, what he's not, his ability to earn money, his ability to trade, his ability to understand concepts. I just don't understand what in his 47 years of life has showed him that he's able, that he would be able to earn 12 times the returns of simply being long SPY. And I'm not trying to be mean here, but I do think it's very important to take a step back and to look at yourself in the mirror and be realistic with your expectations and have a reality check. Because if you don't, the consequences are extremely dire in that you are potentially going to end up losing all your money. For example, I look at myself, and if I tried to play professional basketball, that's not an endeavor that would be worthwhile for me to spend my time, because genetically, I can't do that. If I tried to do something else then that I'm not necessarily accustomed to, or if I try to draw or do something creative, that's something that I'm really bad at. So I don't even try to do that because I know that I'm bad at it. And in this situation, that would almost be paramount to me saying, oh, okay, I'm going to repaint the Mona Lisa and have it be better than Leonardo da Vinci's original portrait. I mean, it's just not going to happen. And I think in this situation, when you have unrealistic expectations, when you have illusions of grandeur, it does end up hurting you, because this person got upset with me because I was telling him the truth and he pretty much didn't want to hear it. So now he's probably going to end up taking significant amount of risk. And my gut feeling is that he's going to end up losing everything. I hope he doesn't, but that's my gut feeling. So just make sure and ask yourself, are you being realistic with your expectations? Leave a comment below and let me know your thoughts. David Jaffe with beststockstrategy.com. Please watch the video on your screen because YouTube says and YouTube believes that you're going to enjoy it. Thank you. Visit beststockstrategy.com and submit your email address to receive valuable free training. Please give this podcast a positive rating and review. If you have any questions, visit beststockstrategy.com and send me a message.